The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this very bright and sunny but freezing cold here in the Boston area. Monday the 15th, mid-month, we're going to very interesting because there was a nice overnight move to the upside, nice early morning pop, and then everything gets given back. And that's going to be something to monitor very closely because this is a peak C in the Chapman methodology, and I'm going to be doing a webinar tomorrow for my subscribers. You can become a subscriber. Very simple. Go to the front page of TFNN, check it out, and click on the. Maybe I should just go there right now. So I didn't have that ready, but I'll do it right now. We're going to go to newsletters. So you go to TFNN.com. And you go to right there, newsletters, and pop right in the front, you got this. Opening call, there it is. So it's the opening call subscriber webinar, Tuesday, December 16th at from 4 to 5:30. That's tomorrow afternoon. Just as the market closes, we'll get started. It's the outlook for 2026. And what looks good going into the new year. And I'll be discussing certain stocks, certain areas, certain sectors, review some of the Chapman Wave technical tools. I use them all the time. I discuss them all the time. So this will be kind of a refresher for some and new for others. Sector rotation, that's kind of what we're seeing here. This is going to be very, very interesting. Trading around core positions. We have core positions and then we take a little bit off, or we might add to it and treat it as something that is giving us a gift, and we've got to accept it. And we do not, as it starts to pull back, we lighten up, and we might keep a core. If we're in from very low down, we'll keep a core and a small position, and we've done with the gold, and we've done with silver, and we've done with many stocks. And then if we get a nice entry point, we could have another decent rally. I love to do that. Love to have stocks in different price ranges, single digits, double digits, triple digits, whatever, for whatever price range you're looking for. You're going to the supermarket, you might want something at a particular price. So and also easy techniques that really help. I mean, just look at this. The 9-period moving average crossed positive in the daily chart right there. On the what was that date? That was the got it right there. On the 28th of November, we are already long. We have added to our long position that we've got from 2020, long position from 2022, long position from April of this year, and another long position. And we've taken profits on the way. So that's like how I like to do it. And look what we're doing. There's a nice, easy technique. Look. 9-period moving average cross positive in the daily. But look at the weekly. The weekly has been positive from June, the week of the 13th of this year. And since then, you're in the 42,000 level, and we've already hit 48,800. And that 9-period moving average is still just an easy technique. And look at this. It's getting into the repellent zone. So I'm expecting choppiness now. Look, we tag it once again. You see this green and pink little mini uptrend channel? Boom, gets it, pulls back, gets it, pulls back. So we're in the pullback area, maybe, we'll see, but I'm anticipating one pop to 48,887 or higher, and then we've got our leg D, and then we've got to be rather careful, just based on a number of factors. All the technicals are actually very strong, but I'm looking at the divergences. I mean, just have a look at this. Yeah, you've got the Dow, just 7 points at this particular moment. You've got the S&P, right there, down $1.61. So as the Dow was making all-time highs, S&P couldn't do that. QQQ couldn't do that. QQQ is now at 612.92, down 62 cents. It's not looking very good. It's arching over. I'm watching it because in the next week, if it takes out, it's at 612. If it takes out the 608 to 604 area, that's a big problem. Let's go to IWM, all-time highs yesterday, Friday. And now it's pulling back, down 56 cents. We're along the Dow, we're along the IWM, the Russell 2000. And look at the weekly chart of the Russell. Made a new all-time high. It had this M-shaped pattern in the on-balance volume. That's very good. How important is the on-balance volume? Have a look at this. Look. On-balance volume. Here's the 10-minute E-mini. Crosses positive at, that was 3:35. That was last night, in the morning, that is. 3:35 Eastern Time. Green, 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 green. Goes pink at a peak F. After going in this long rectangle formation, takes out the low and says, okay, now you're going to try to go to the high, which it does. Starts a brand new peak A, B, C, D, E, and another F, and it turns down. All of a sudden, look at the space between the 9-period moving average and the black 14-period moving average, giving us a lower low. As we're speaking, a leg B to the downside. They're called troughs on the downside. Legs and troughs on the downside get lowercase. So these are nice tools to use. Now here's another thing that I want you to go through. So I did that. Look at the IYT. This is the transportation index. Makes a peak B. That could be an alternate. No, it can't be an alternate count because you went lower than the starting point of the last buy signal to buy mode to a peak D. So it pulled back to the 68 area, and it's down today 82 cents at 75.56. At a peak B. So I'm expecting choppiness, and I'm expecting that it does go above the 77.20, was it? 77.15 high of Friday to make a C, and then it goes to a D. So choppy, choppy, choppy. That's what we're anticipating. All right. So now you've got, I could call that Dow theory, because you've got all-time highs with the Dow industrial average with the iShares Transportation Average ETF. All right, a couple of things I wanted to go through right now. Look at this. Gold is doing very well. It's up $30 at 43.58. The high that I'm anticipating is going to attempt to get to is the high of the 20th of October, right there at peak D, the fourth highest peak, the Chapman wave methodology. That's where other things can happen. 43.98 slumps all the way down to the 3,900 area. Now, in the rectangle, large, this is what I'll be showing as well, techniques that I've developed. We saw the narrow rectangle in the 10-minute chart of the E-mini S&P. Look at this. This is the daily chart, a large rectangle. Large rectangle says if you come straight down, whatever it is that you're following, could go to higher highs, mostly higher highs and preferably higher lows, all the way to the previous high, just under it, right on, or just above. And then you got to be careful, because if it pulls back halfway into the rectangle, we're needing at any point, if the IYT over the next 3 weeks or 4 weeks closes under 41.90, that's a real problem. Not only that, that actually goes with this inside track propellant zone right there. Okay, so those are techniques that we like to look at. Let's just do this quickly. We've got the dollar trading right. Oh, dollar's very weak, down 19 ticks at 98.20. We've got the high-grade copper. High-grade copper had a nice rally, but it's pulling back. It's at 5.44. I'll be right back. Basil Chapman, Pancake Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back, and yeah, look at high-grade copper. This is that weekly. This is much too much to get to the $5. No, it was $6.11 high of the week of the 25th of July. Plummets down to the 200-period moving average. It tests it for a month, and then it finally breaks to the upside. It's already got to the D, and it's way below the previous peak D. So this one is a little different. It is in the large rectangle, but I wouldn't be surprised if it takes a little digestive phase here, and then it starts up. So talking about digestive phase, now the Dow's down 61. So, excuse me, I've been looking at this, and I spoke. So on Friday, I did my video for my subscribers. I do that every week. We're looking at different things, and I was trying to explain that there's been a rotation. I've been identifying this rotation for some time, and that is that the oldies, stocks that were like forgotten, like General Motors, all-time high, as we're speaking right now. This is amazing that you could have the deep cyclicals. I mean, this is, when I say cyclicals, these are the ones that are really money intensive. Everything they do is just the union, everything, the machinery, the size of everything that they do, the equipment, and that speaks to something going on within the economy. Now, look, this is different, and the reason why we chose GM to be long rather than Ford is that Ford, although it's not such a bad chart formation, I think General Motors seems to have the edge, and maybe on a fundamental basis as well, but it has the edge right now. But Ford is not doing too badly, considering just in the last month, it's gone from the 12s to the 13s. That's a nice percentage. And if you look at the monthly chart, it's getting back again to all the technicals are pretty good. So it's just the choice that I made, but it's very interesting that these are doing quite well. And Alcoa is another one. That's another one we're along. But look at this. Alcoa is aluminum. Here again, it's it's money intensive and time intensive. This is a lot that goes on. So I'm really pleased to see it. At the same time, all those stocks that were just absolute darlings before already fall. I just had a question about SIM, which is symbolic. It was one of my favorites in the sense that over the years, we've had some really good gains at different times. Really, I mean, really good. This went from our entry at the 22s all the way to 87.88, and we've been taking a little bit off here and there, so it really adds up. And now it's just kind of stalling down here. It's got this, it's like a little fulcrum that says either you're going to reverse to the back to the upside, or you could have another move like a propeller shaft down to the bottom, trading down $1.31 at 60.12. But this is end-to-end AI robotic warehouse automation systems, and Walmart is there. Maybe they're only. They are the ones that provide to Walmart these robots. So I don't know what's going on. Walmart's at an all-time high as we speak. 117.45 is the high today. So I'm not sure why this. Every once in a while it does fantastically symbolic, and then it just plunges. So I don't know if this is the big plunge, or whether it'll come back. So the question is, it's trying to form a base here. Is it ready to move higher? And all I can say is the rotation in this particular move is becoming more and more selective. Now look here, another one that we own from way back and is still doing very nicely is Bank of America. So Bank of America all-time high as we speak at 56.07. And I had added SoFi because SoFi, I thought, well, I don't want to give up Bank of America. It's doing well to trade into SoFi, and then we got into SoFi, got stopped out. We took a little bit of a loss, but I was not prepared to mess around at all. Either you were in or you were out, because if it worked, it should be very good. And look at this, there's a divergence here. So I'm saying that there's great selectivity. Just for the moment, while I'm talking about it, look at KRE, which is the regional bank in ETF. Yep, that's very nice. So we've been in and out of this every once in a while, and then we just sort of stepped aside right at this moment. But I think it's actually doing very nicely. So that's a D right there. E, and it's stalling at an F right now. But the technicals are extremely strong. It made the cup formation, and it went above. So this is peak A, peak B, and I'm calling this an E/C. I have to have an alternate count because it's the cup formation, and cup formations very often make double tops or double bottoms. In this case, I'm just being prepared. I'm saying still very strong, but it's in a leg B. In the monthly chart, all-time high was 78.81 in January of 2022, almost 3 years ago. And May of 2023, it made a low of 34.12, got more than cut in half, and now it's coming back. So all I can say is that this is a rotational market. And in this particular instance, I'd just be remiss in saying be selective. Don't be over-leveraged. I'm looking at this as saying there's a chance that we're getting close to some kind of topping formation in January. How deep, I don't know yet, but I'm waiting. I'm waiting for the Dow to get to a leg D. I'm waiting for the IWM, the Russell 2000, to get to here we are, to get to a C and then a D. Will it do that without a much deeper pullback just in the short term? I don't know. So far, the technicals are still good. So here's another thing that I wanted to mention is that within the context of rotation through the different sectors, let me just show you. So Tesla made a high about a week and a half ago, just under 460, then a pullback. But look how the 9-period moving average held above the 14-period moving average. Look at the MACD and the daily chart, how strong it is. Look at the stochastic, still nicely above 80%. What does it do today? it springs to the upside and it goes to 481.37 in leg D, the last D, at 474.07. This is what I'll be discussing in my webinar tomorrow afternoon for subscribers. And remember, so you've got Tiger dollars. I mean, not only could you get my service for the month for free if you choose to. I don't want you to do it, but if you choose to sign up, and then you find you're just not satisfied with it, but you get the webinars, you get everything, and you're getting a discount because it's the Tiger dollars. Hopefully you would stay. I mean, most of my subscribers, when they start up, I mean, I've got subscribers, I'm sure some of them go back at least 20 years. I like consistency, and let's see what happens. So here we are with the 488.54 all-time high back in December of 2024. Plunges down, tested to 214, over a 50% decline, comes back, walks, this is the big rectangle, walks that 9-period moving average all the way up to today's 481, just under the 488 all-time high, and that's very nice for Tesla. And that's what I'm saying. It's very selective, right? And so we've got a break coming up. Dow's down 118, S&P's down 22. Talk about selective. Whoa! That's why I say to the subscribers, we're going to be very careful. We are looking at this as a choppy rest of the year. That's what we're looking at. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
FXI, which is the large cap China ETF, I drew this as an arch formation. It's a pattern that I talk about and I'll be discussing tomorrow with some of the charts. The lowercase h can, in fact, like the monthly chart, go to a lowercase m. And I'm looking at this and saying, well, down 26 cents at 38.82. That's not really a big deal, but it is a big deal in the sense that the 9-period moving average deflected lower, didn't turn positive. It's still pink, and it's down, it's negative. Not yet the weekly chart, but it's very close to doing that. So that just says to me, you got to be a little bit careful. A question came up about XP and G. Speng. Oh, man, am I XPEV? XPEV. I said XPEV is trading down 29 cents at 18.70. Got the dreaded H. It did it once. So let me just show you. These are techniques that I'll be discussing tomorrow in my webinar for subscribers. But if you're new, you'll get to see some of these patterns, and you'll see how they work so nicely. I have 3 core patterns that we monitor: straight up, straight down, cup formation, arch formation, a mix of 1 and 2 or 1 and 3. In this case, it's 1 and 3 because it goes straight down. There's the back of the H. Then you got the little cup, the arch, and that's peaks A and B, and it very often fail at B. If it takes out the left side low, it can go almost 1-to-1 to the downside. It did that, went to leg B under the 200-period moving average. This is Speng. This is Speng Inc. Designs, develops, manufactures smart EVs. And look, there's the pattern. Now you've done it a second time. So you just have to be careful with this particular pattern. It made a peak. Why is that an E? That should be a D. Sorry about that. Wonder. There's your D. Okay, D right there. Okay, so D and a D in the monthly chart. D weekly, E daily, D weekly, D monthly. Just got to be real careful. And it is on the way to make yet another H pattern. What I was talking about before was the M. What we were looking at? M pattern. We were looking at, that's right, we were looking at the FXI. The FXI, there's a lowercase h. There it is, lowercase h right there. And if it holds the left side and does it again, you make a second H, which looks like a lowercase m. Sometimes that second H is much lower down. It says, be careful, because if you take out the left side low, you can go quite a bit lower. But if it holds very well, in other words, this is a weekly chart, if by next week, instead of a 38, testing 38 support, it actually breaks into the 38.65 area, that'll say, maybe yet another, just sideways, but in an M-shaped pattern. All right. Question came in, could I look at now? So wait, first let me go back to this. Okay. Rocket Lab is trading down 4 at 57.31. That's a pretty steep pullback. So we're long from the 48 area. It ran all the way to right there, ran up to 65.18. So we took a little bit off at 65 pre-market open on Friday. I think it was at 68, so that's 68. 18. We took off at about 68.25 or 35 or something like that. And so that was about a 14% gain. And I anticipated we'd pull back. And I tried to get in today. I'm not sure why I seem to get in so high. It should have been much lower. I still would have been stopped out. We got stopped out very small loss. But I'm looking to add to this because it's held very nicely rocket left. So the question came in, this is the peak B, and it will only be negated if it takes out the low that was the very low back in November the 21st, which is at 37.57. Yes, but we will not be there that long. But I'm saying that's the way in this particular pattern. I'll just put 37. That's the way it works. And the 9-period moving average is very strong. The MACD is good. Stochastic strong at 91%. The on-bounds volume has pulled back a bit. So I'm anticipating in the next 2 days there'll be some kind of a base and it'll start to rally. But it could rally and have a failure below that. But so far, it's acted extremely well. Today is a little steep because of all the other selling that's going on. So with that said, another question came up, could I look at now? Let's look at now. So now is trading down 88 at 776. I've had a problem with service now. It always appeals, it always sounds, I hear about it, it just sounds great. And then it has sudden pullbacks, and they're really quite sharp. But if you look at the monthly chart, from the low that was made back in August, I think it was, 2022, I forgot to put it. So 337 round number low in a monthly chart, October of 2022, 337. Did I notice that, or did I not notice that? 337 round number low. 10/2022. Isn't that amazing? And what does it do? It screams into just under 1200, pulls back. Now it's got the H pattern in the monthly chart. It's already got a peak F in the weekly chart that was the high back earlier this year, somewhere around February. It screams up to the 1200-ish area and then pulls back sharply. And it's done this dreaded H pattern, but it hasn't broken down yet. But this is not a good-looking chart. Down 10% today. Let me just see this. Yeah, there, peak G in the daily chart, right there. And what was that? That was at. Oh no, that's not the high. That was the high at 973.63 with a round number 962 open on the 24th of September, and it's goodbye from there. Where was the major high? Right there was. That was almost like a rogue wave, huh? Ooh, 1,015 round number low. 1,057.39 high. Yeah. So back in July, it makes it high, and it comes down, has a very good rally into September, and then turns down. And look, even it constantly has these Ds. Look at this. Just check the base here. Look, the line is 88731. 887.95. Look at this. Even it loves to have a full peak D or higher in its daily chart. Look at this. A, B, C, and on that long wicked candle, must have been use related, it pops to just over 960. Peak D comes down the next day, and that's it. And now it's trading from the 960.11, and now it's just at a peak A, B, and it failed at a C. No, A, B, C, D. Service now. That's a problem. I'll be right back. Down 67.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Oh, so a couple of questions came up, and let me just get to, so the GDX, this is the gold miners, went to a peak, a leg D, it could be a peak D today, and the last time it made a peak E, that's the 5th highest peak at 85.09, October the 16th. It came down very sharply to the 68s, made a double bottom, and it started up A, B, C, 1, C, 2, and they made that D, holding very nicely, and the weekly chart is still a leg D. There was a very interesting, there it is. The stochastic actually dropped sharply. Now it's back to 82% on that pullback. But look at that 9-period moving average, the green. This is what I'll be talking about tomorrow. So many educational things and so many stocks that we're going to be looking at that we are looking to buy because there's been a rotation. And what I've been talking about earlier was there was a rotation from the hot stocks of this last quarter, it could be even the last half of the year, that have now just taken it on the chin, a lot of them. And as a result, there's been a rollover, and money managers, fund managers, are starting to put money. You can see it. They're putting money to work in areas that, I mean, all those stocks, the names that were historical, as I say, General Motors. Look at General Electric. General Electric was just in the dumps, lousy. 316 double top back in October, comes charging down, comes down to, Thursday it was at 279.64. I mean, that is a 10% to 11% correction. All of a sudden, it's got the 9-period moving average positive today because it's gone from 279 129.64 on Thursday to the gap up, very strong candle of Friday, and today it's making a high. It's at 304.61. So there is a rotation going on, and this particularly has a pattern that I'll be talking about in my webinar coming up. It's called the Chapman wave falling axe formation, and all the implications that go with it. Let's just have a look at it now. We'll see what happens, because it's still in an early stage. We're just testing the trend line. So what is this particular pattern? This particular pattern is this right here, where you go to a peak, D, E, or F, but you make a major pole high, and then you come down with lower highs and much lower lows. But then all of a sudden, you find some support, and that support says, hey, wait a minute. You've taken out the upper declining trend line. That means you can go to all the previous peaks until you retest the major high that was made just recently. Well, look at this. You've got the weekly chart that made this high back in, was at the end of October? Yes, week of 31st of October, 316.67. That's that double top that was made. And then it pulls back, trough A, trough B, and all of a sudden turns around. That 9-period moving average in GE is so strong. In the weekly chart, especially in the monthly chart, above the 14-period moving average, that is like a cork in water. It just pushes back up again, or it propels back up again. So we're going to be seeing it, because if GE starts to trade this week, if it closes anywhere above 304, but preferably if it trades and it can close at 308 or higher, that's that rotation we're talking about. That's what I'm saying. And there's this falling axe formation. If it takes out the 306, let's say, then closes there, then the next high it would be looking at is where did that go? 313.76, the high of the 14th. And then the all-time high, GE Aerospace, goes to 360. We're still long from right here, 198.90. You got a little bit left. And we're wanting to add. It's looking very good. So that's just to give you a couple of ideas of what we're doing. Now, there's something else I didn't do and I completely forgot. Thank you very much for reminding me. Why do I forget? I have no idea. Bitcoin. I think for 20 years or something, it just wasn't a major focus, well, for 18 or 19 years. And now, of course, it should be a focus. But that 127,750 high that was made back in the week of the 10th of October, with a plunge down to 80,750 in November, and then it goes to peak ABCD underneath the previous highs, always says to me, watch out for a deflection in the pink 9-period moving average, because it could pull back very sharply and retest. First of all, we'll test this trough right here, the trough of the 1st of December at 84. Yeah. 84,120, and then the 750 area. I've been negative. We are actually long the IBIT for quite some time. We've been long right from over there, right there. And we ran it up and we've taken profits. We now just sitting with a small core position, just sitting there saying, okay, are we going to get out completely, or are we going to add to this at any point? Well, when you make a peak D with a tiny little move, peak A, little peak B, little tiny, that's terrible. You want to see strong moves. Look at that, A, B, C, D. And this is just too tiny, and says the upside is very limited. That doesn't mean to say that it has to smash to the downside. It just says the upside is limited. Now check all support levels on the downside. And as I say, this is IBIT. And within the context of, let's call it portfolios, we are still long IBIT from 39.50 back on the 5th of November a year ago to 2024. So, we got a little room, but I don't want to give it too much room. But we have taken real nice gains. Okay, so is that it for today in terms of the market pulling back? Let's just have a look at the E-mini. So the E-mini goes to this, I meant 5-minute chart. I think thank you for correcting me. I said 10-minute, but it was a 5-minute chart, and it pulled back very sharply to a low of 68.06.25, and now the pink 9-period moving average is rallying a little bit, still way under the 14-period moving average, but look how close. Look at the histogram in the MACD. That's starting to prove to be quite beneficial to the price movement, and the stochastics come off from the single digits to 27%. But that on-balance volume, see that blue line? Oops, it's trying to get up. The blue line needs to really move higher to say that you've got that volume increasing with it. But so I think that we might have seen, I don't like to talk about this, but I'm just going to say there's a chance that if we've made some kind of intraday low without breaking, this is the E-mini, without breaking below 68.06, let's say 6,800. Below 6,800 says, nah, that's very bad. I think we're done for the day with all the selling. And that doesn't mean to say now we're going back to the highs. It's just saying that maybe we've formed a base of support between 68.12 and 68.06 for the E-mini. Next half hour, you have to see the E-mini up 250 right now. It's 68.33. Let me go to this. Let me go to the 68.46 is the 1 minute chart. 200 period moving average, that should be the next resistance level. If that gets taken out, wow, it would be fabulous if it can get to 68.53. That's the 200 period moving average of the 10-minute chart. I still see buying coming in. Very selective, but I see buying. I'll be back in a moment for the final segment. And don't forget tomorrow for subscribers, right, if I can find the darn thing. Let me see if I can find it.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, so there's a little potential, just shorter term, double top Freeport McMoran copper down from its high of Friday. That was at 48. Let me just check the price. 49 round number high, and it's pulling back a little bit here. But the technicals are still strong. This is the one that had that mining accident. So the high that was made back in, I think it was maybe July. Yeah, let me just check. July, that was in the 49.12, the week of the 11th of July. 49.12. Yesterday almost got tested because it went to 49.00, round number. So I'm watching these to say, do they stall something like this copper? And copper's done very nicely recently. And SCCO was a little bit stronger in the sense that it made an all-time high, still had that double top, but then took it out. So Southern Copper is doing very nicely. Leg C in the monthly chart. There are certain areas that are working very nicely, and that's what we want to kind of harness and put money to work in certain areas, even if they're at highs. I'm finding now that stocks that have this segment of the phase that we're looking at this point says that don't be afraid of stocks making new highs because they become the new favorites. And I would have to say Alcoa is doing it today. Look at that, up, and General Motors is up. And that's the reason why we've loved those and added. We in other areas we've added, but in this particular, these are new positions for us over the last a number of weeks. So it's very important, very selective move. So with that said, I'm going to hand you over to Steve Rhodes. But don't forget, tomorrow I'm doing my webinar for subscribers. You can become a subscriber, and you will be able to go to all the webinars I've done on the rectangle formation, on the narrow rectangle formation, the double tops, all sorts of things, a 9-period moving average, fabulous techniques. Look at this. The Southern Copper Weekly has gone above the 9-period moving average since June of this year and still there. So these are techniques that you will learn, and we've had some